Bang! What is going on, everybody? Tuki here, back with another video, a part of the Tuki Supply and Demand Bootcamp. Hope you guys are doing well. This video is going to be more on the shorter side, but today we are going to be covering how to best utilize supply and demand to have the best exits and take profits within your trades. Now, this is going to be fairly simple, but I still figured might as well make a video on it so you guys can best understand how to actually utilize these zones to have the best take profit points, best exit points on the charts. So A, you don't get reversed on in your trades, and B, you can maximize your trades and catch the best amounts of profits before price does reverse on you, if it obviously does, which market is never going to be moving in one direction, obviously. Therefore, you want to best utilize supply and demand to understand where is price going to reverse or switch directions. So let's go ahead, hop on into this here. Like I said, it's going to be more on the shorter side. So right here, as we can see, we have these zones down here, which are pretty much 30-minute, 15-minute, and 5-minute demand zones that we have here. Now, like I said, you guys, for my take profits, for my exit points on my trades in the previous videos, I mentioned that I'm almost always targeting a key level, a certain supply level, demand level as my take profit, as my exit point on the charts. Almost always. Unless I'm looking to like pass an eval or something like that, we need something a bit shorter. It might differ, but majority of the time, this is what I'm doing. So let's say that we are entering off of this demand zone right here, right? Where would we put our take profit? Where would we put our exit level, etc.? So in terms of the overall exit level, we would obviously anticipate price to want to push up to these highs here, tap these highs here. Therefore, we can use these highs, which was also a strong high being created, then led to an aggressive push to the downside as our supply area. So let's go ahead and mark out this point right here. Keep in mind, this is the 30-minute time frame. So extend that out all the way. Now that is a bit high up from where we entered. So we obviously want to make sure we have a point that's not too far from where we entered to where we can either take partials or move our stop to break even, or even trail our stop. So in this case scenario, we want to look for either some sort of mini supply zone, mini demand zone, fair value gap on the 5-minute or 1-minute. Keep in mind, although fair value gap isn't a supply and demand zone, it's essentially treated as a mini supply and demand zone. What is a fair value gap? A fair value gap is essentially just a point where unfilled orders are left, therefore meaning when price does retrace back to that unfilled gap, orders are going to be filled. Same exact process that happens within a supply zone or a demand zone, okay? So in this case, let's say we enter off of this rejection right here, right? We would then want to look for some sort of bearish gap that we can utilize as our exit points, or sorry, as our partial point or break even point. So if we can't find a bearish gap, which we can see right here, we do have something right here, but looks like we already tapped into that. So we can utilize this point right here. So as you guys can see, we pretty much have like some equal highs being created right here, then led to a strong push to the downside. This would also be considered a supply, right? Or a resistance area, which would also be a perfect point to utilize as our partial point, take profit point, or break even point. Okay, so we marked out those highs. We can also mark out this 30-minute supply. So boom, boom, extend it all the way out, and then we can even mark it out as our TP1, okay? Let's go ahead and just, for example, mark that out as our TP1. So once price taps in, we would then take partials on this, maybe even move our break even, which is what I would do in this scenario. And then, like I said, we have that final TP up, at this 30-minute supply right here. Okay, we can see price does continue a bit higher. We did eventually dump, but still these would have been both perfect to take profits to utilize, because like I said, these are both areas where price is likely to present some sort of reversal. Therefore, understanding that, we want to be sure to at least take profit at that point so we can lock in that trade, not let a green trade go red, and also for our final exit point, in case obviously it does reverse there, we can get out at the best point possible before price does reverse on us, meaning we can catch pretty much the whole entire move, and also meaning we can catch the most amount of profits on that trade in case price obviously does reverse. Now, it's very important to always be aware of your key levels. Even if you're not even trading, if you are just scoping the charts, you still want to identify where your key levels are and how close price is to those key levels, because it helps you understand, okay, what is price doing here? Is price more bullish here? Is price more bearish here? How confirmed do these key levels look? How confirmed do these zones look? And you can better utilize those zones as something to understand, okay, we're likely to reverse here, or okay, we're likely to break through here, things like that. So that would be a really solid example in terms of how to actually utilize supply and demand for your exit points, for your take profit points. I'll just do one more quick example for a supply zone, and then we can wrap it up. So obviously we have a 30-minute supply right here, also a 30-minute bearish FVG right here. So boom, confluences stacked on confluences. Now, if we were to take this trade, we would essentially just target the nearest key levels on this, okay? Let's go ahead and get rid of this. Now, I do see... Okay, so right here, you can see price was a little hesitant, then leading to another leg up. Also, just some strong lows, equal lows created right here. This could be a good key point to utilize as some sort of take profit area, break even point, etc. Right? You can then see down here another 30-minute zone, strong low, then leading to an aggressive push up, obviously creating a 30-minute demand. Okay? So then, how you can best utilize these zones as your take profit points, as your exit points, to really make sure you are getting the best out of your trades and ensuring that price doesn't reverse on you while you are in your trades. Because let's say, for example, you're in a trade and you're not aware of your key levels. You don't have your key levels marked out. You could be in a trade and price can hit a demand zone that you don't know about, and boom, just reverse on you, stop you out, bring you back to break even, and obviously no one wants to go through that. So that is exactly how you can best utilize these zones, utilize these levels as an exit point. Hopefully you guys found some value, learned some new things. I will see you guys in the next video for the series. Much love. Go catch some bangers.